Trading indicators. Which ones actually work? Look, if indicators really work, why do most Indian traders still lose? Hey everyone, welcome back to channel. I'm Manish and today we are talking about something trader has googled at some point. Best indicators for trading. But there's the truth. It's not about finding the best indicator. It's about using the right one for you, your strategy, your psychology, and your time frame. Look, before we dive into choosing and combining indicators, let's take a step back and answer a simple question. What even are trading indicators and why do they matter? Trading indicators are mathematic AI tools based on price, volume, or open interest. They help traders make sense of market movements, spotting trends, identifying entry or exit points, and avoiding emotional decisions. But not all indicators are the same. Some are designed to follow trends, showing where the market is heading. Others are like momentum indicators warning when a friend is losing steam. And some focuses on volume, volatility, or even support on resistance zones. Think of indicators like lens. One shows directions, another shows strength. A third shows where the road might get bumpy. Look, used wisely, they can sharpen your strategy. And in India, with markets like Bank Nifty and Nifty 50 moving fast, picking the right indicator combo can make all the difference. Let's begin. So in this video, I will break down which indicators actually make sense, how to combine them, the three biggest mistakes Indian traders make. Let's dive into the real example from Nifty and Bank Nifty, and my own personal story when indicators helped me and when they betrayed me. So let me guess. You open your chart and added RSI, MACD, and Bollinger Bands, Super Trend, volume, and EMI. And look, now your chart looks like a Christmas tree. Been there, done that. Most beginners in India do this. They think if one indicator gives signals, maybe six will make it perfect. But here's what happens. One says buy, another says sell, and you get freeze. You miss the trade or worse, enter blindly. So more indicators is not equals to best results. The more noise you add, the less you can see price action, which is the only thing that actually moves the market. First, blind trust. I saw RSI hit 30. I bought it and dropped. Why? Because RSI doesn't predict, it just tells you momentum is low. Prices can keep falling even RSI is oversold. Second, now understanding of the max. Do you know how MACD works? What's the formula behind super trend? If you don't know what the indicator is calculating, you are trading blindly. Third, indicator overload. Using 5 to 6 indicators at once, you're not trading. You're overthinking. Use indicators as a second opinion, not as your only brain. How to choose the right indicators for your strategy? Let's simplify. There are three types of traders. Let's match indicators for each. First, intraday traders like 1 to 15 minutes chart. You need speed. Use EMI 5 to 20 for trends. Stochastic RSI for entry points. Volume to confirm breakouts. Keep it fast. Markets move quickly. Indicators should too. Second, swing traders. 4 hours daily chart. Hold for a few days. Use MACD trends direction. RSI overbought, oversold zones. And support resistance zones. Manually marked. It's about catching medium moves. Third, long-term investors. Use SMA 50-200 classic moving average. Looking for a golden crosses, dead crosses, and it's a combined with fundamentals, news, earning, macro data. Don't overtrade. Let the signal come to you. The golden rule. First trend indicator plus oscillator plus price action. Example combo EMI 20 trend, RSI momentum and support or resistance zone. So live chart example, let's pull pocket option. Step 1, let's go ahead and set up the chart. So add Bollinger Bands, period 20 and deviations 2. Also RSI period 14. And let's go with the step 2, look for the setup and price touches or breaks below the lower Bollinger Band. So it should be possible bounce, RSI crosses above 50 and confirmation of upward momentum. See, if the price is also bounced from a previous support level, so it's obviously like a stronger entry point. So mark the candle where price touches the lower band and RSI goes above 50. So support is actually nearby. So this is your call, guys. Up entry. So we're gonna just go entry, call trade and the next candle. An exit should be like 1 to 3 minutes trade depending on your plan. So avoid these mistakes actually. Don't use RSI plus stochastic plus CCI together. They all do the same thing. And use Bollinger Bands with RSI. They show the different data and volatility momentum. Keep your chart very clean like your mind. I spoke to like 5 of full-time traders in Delhi and Mumbai. Guess what they said? I use EMI for like volume plus S by R. That's it. I don't even like open indicators anymore. Price is key. So Telegram bets are okay, but I double check every signal on my chart. So real pro traders use indicators to confirm, not to decide. Look, when I started, I followed a strategy that used 6 indicators. It worked for 2 weeks, then failed miserably. Why? Because I didn't know why each indicator was there. Then I simplified just EMA plus RSI and plus support zones. My win rate went from like 42% to 61%. Not magic, just clarity. So here's the truth, indicators are actually powerful, but only when you treat them like tools, not magic. Keep it simple. That's how you stay consistent. Now tell me, what's your favorite indicator? Drop in the comments. I would love to see what works for you. And hey, if you want my personal checklist of proven indicators combos for different strategies and time frames, the link's right below. But here's a twist. In the next video, I will reveal how most trading bots rely on this exact same indicators and why 90% of still fail. So if you want to trade smarter, not harder, subscribe, like and share this video with someone who is stuck in the indicator and overload. I will see you in the next one. Until then, trade clear, not chaotic.